Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the home office in Siberia, Illinois, dealing with sub-zero highs for a few days now and some pretty awesome 30 below wind chills and schools getting canceled and all the children at home and the joys of living in the Midwest in January. I'm not sure if things are much warmer way down in Atlanta, Illinois, where we are joined by our Director of Biorelations, Verl, no doubt Prather, and also joining us, but from Platteville, the Paris of Southwest Wisconsin, grain, feed, dairy, livestock, broker, advisor, consultant, agent, you name it, all-around utility player and market guru, Miss Jenny Wackershauser. Team, how are we today?
We're good.
Doing good, Jim. Staying warm.
It's hard to do these days to stay warm.
It's not hot out there.
It's not hot in Atlanta?
Not today.
Not today. Jenny, what's happening in Wisconsin?
Well, we had 2 days of blizzard conditions last week, so we're sitting on a good 2.5 feet of snow, a high of 0 the last 3 days. Real typical Wisconsin January.
We're all feeling stronger, right? We got our shovels out, right? We got our workouts in over the past week or so. We feeling good, or have we thrown our backs out?
It's been a rough few days. We'll put it that way.
Yeah, exactly. Yeah, things start to seize up at times. It's not what it used to be. That's for sure. But we've got a lot to run through because aside from polar vortex and having these super awesome temperatures out here, we had a 3-day weekend from the markets, which can cause some fireworks at times. But also, we had that wacky WASD report on Friday heading into the 3-day weekend, and there was a lot happening in that report. So we are going to run through that today. But before we do, Paige, if you would kindly timestamp the broadcast, it is Tuesday morning, not Thursday morning. It's Tuesday morning. We wanted to shuffle things up a little bit coming off of that 3-day weekend after that WASD. So trying to hit you guys right away with some of these numbers and some analysis this week. So Tuesday morning, the markets are mixed depending on which side of corn and soy you might be on. Corn is back down again. We are trading below $4.50 per bushel for the March contract. So that's been kind of that crucial psychological level from what was the nearby low on December as well. And now March, we're pushing through that threshold as we start the new shortened trading week. But then soybeans are back up a nickel or so today. We're looking at nearby March is up about 5 cents. We've got meal, that stubborn little byproduct, which made a nice push lower on Friday, recovered back to unchanged Friday, and is now up $6. So we got to keep an eye on meal. We're back towards $3.70 per ton on the March contract for meal. So we got to keep an eye on all these things as we push through the shortened week here. But I guess, Verl, let's turn this thing back over to you. We had this huge report Friday, and we had a couple things going on. We had stocks. We had that big yield number everybody's watching for, production, watching ending stocks, what's happening in the globe, all that good stuff. What were the big takeaways for you, Verl, from Friday's report?
Yeah, so, you said it. I mean, we finally made it past this January WASD report. We're already halfway through January somehow. I don't know how these weeks could go by any quicker at this point. But yeah, the market has had a few days now to digest some of the information released by the USDA on Friday. Volume on both corn and soybeans on Friday were definitely the highest we've seen in a couple of months now. And so that likely means, obviously, that the trade was surprised by some of the numbers that the USDA had thrown out to the marketplace. According to the report, one of the biggest surprises is that the U.S. grew a record crop of corn last year, both in average yield, which came in at 177.3 bushels an acre, and overall production, which was well over 15 billion bushels. The reality is continuing to set in that there is a plentiful amount of corn to go around in the countryside. End users remain mostly uninterested at this point, getting too far over their skis and purchasing up a lot of grain for deferred usage. And instead, they're kind of continuing to purchase just what they need in the nearby to keep the grind of corn going, if you will. The quarterly stocks report showed more of the same for corn. Specifically, the rate of disappearance was stronger than we saw last year, actually. I mean, we've had very nice margins for ethanol to kind of coincide with that. We've found some decent export numbers along the way as well, especially to our friends down south in Mexico. But we still have a massive amount of corn, specifically sitting in the hands of U.S. producers in on-farm storage. So additionally, throughout the first couple of weeks of 2024, open interest in the corn market has increased very significantly. We've seen quite a bit of weakness in futures alongside of this increase in open interest, and this likely is basically saying that the funds have continued to grow their sizable net short position. With this WASDE now behind us, I think that the funds may have some new kind of confidence to go into this corn market and say, yeah, we basically avoided any surprises to the upside from this January report. We didn't lose a ton of acres. We've got better yield. Ending stocks didn't move a ton. However, they moved enough to say that, hey, this corn crop's not getting any smaller at this point. So I believe that the funds are just going to continue to lean into this thing on the short side of the market.
Yeah, I think that's an excellent point, Verl. I mean, managed money has an absolutely massive net short position across agricultural commodities, right? I think it's one of the biggest net shorts that they've put up across most ag products since at least the COVID lows. So just a huge position. And yeah, this report didn't do anything to incentivize the funds to start covering those shorts, at least from a corn perspective. So like you said, Verl, this, if anything, it just kind of cemented that bearish mentality. I think this market threw us all for a loop. Me personally, even just the week leading up to the report, you go back to that Friday beforehand, and we were hammering that corn market pretty hard. We came in after the weekend that Monday, hammering it pretty hard. And I was wondering, if we're going to hammer this thing this hard before the report, they have to give us something pretty stinking bearish to keep hammering this thing after the report. And then they did. They gave us that yield number, and it was nuts. I mean, just a record production number. I think that was a higher yield number that any private analyst had out there in the marketplace, at least that we saw. So they did manage to kind of one up the industry and give us this massive production number on the corn side. Before I turn her over to Jenny, Verl, you and I were sitting shoulder to shoulder in the Chicago office maybe a month ago or so. And we talked about, if we turn the calendar over to 24, would we see farmers selling from a grain perspective? And as you noted today, that stocks report showed that there's a ton of grain still sitting in the hands of the U.S. corn grower. Yes, we saw exports pick up quietly, right, over the course of the last few months. And you noted Mexico has been a huge purchaser of that corn. So there has been a little bit of flow. Ethanol margins were strong enough to keep things moving. But with this big of a crop that offset any of that demand pickup, is the corn grower going to ultimately start to unload some of this product here? I mean, is he going to be incentivized enough by basis anywhere? Because futures are clearly not going to do it. So is there going to be any movement here in the interior over the next few weeks?
I think some folks have started to digest the numbers and realize that, yeah, there is a lot of corn out there. It wasn't just me that had good yields this year, surprisingly, right? Given the situation that we had all summer, it was also my neighbors and their neighbors as well. We have started to hear about some folks just kind of throwing in the towel on this thing and saying, you know what, get me out of this market. I want to sell it all and move on. But I do still think that there is a plentiful amount of producers that have held somewhat of a bullish sentiment coming into this report at the very least. And to be honest, it feels like there's a little bit of shock and maybe even some disbelief behind it that are having guys kind of continue to hold tightly onto the bushels, whether they're waiting for basis to come their way a little bit, or maybe they're just waiting for some better weather to start moving some grain again.
Yeah. Okay. All excellent points. Thank you very much, Verl. Jenny, let's turn this thing over to you and we'll put our grain buying hats on. We talk about basis, really not having to do much. If you are a grain elevator or a river terminal, you are buying corn at a much cheaper level at the moment, with futures doing all the legwork. Anything you're seeing from the grain buying perspective now that this report is in the books?
Well, the last few months, I feel like we've seen basis be fairly stagnant, and we'll call it normal. Nothing's a great buy, but they're not punishing anyone. And anecdotally, we've heard more and more comments about, in the soybean meal world, maybe their exports are starting to get a little quieter. So we may start seeing them fill up, where maybe we will revert back to that normal market supply and demand opportunities, where they need to move some this week and they'll have some nice basis offers or discounted. But we haven't started to see that yet in this market. So yeah, futures has been doing most of our work for us, for the buyers. Soybean meal specifically, our stubborn little byproduct, really did give us a nice look on Friday, right in the middle of a blizzard for dairy producers who have a million other things going on their plate. That window of time to maybe do some stuff that we haven't seen, 350s in some of those forward months on the board, gave them an opportunity. And again, like tends to happen, not a lot of ability to kind of take advantage of that. So patience is still on our mind here for kind of April forward, but it's not a bad window to clean up any of your needs on those proteins here for spring. Just get that risk of that $20 or $30 move higher off the plate and just kind of get it taken care of. So I do think this is probably some opportune areas on proteins. Corn, I would probably still be patient. We proved on Friday that the crop is there. It is a huge U.S. crop, and our friends in Argentina and Brazil continue to have really pretty good rainfall, and their crop is coming along as we're progressing into their key filling, and harvest season is just around the corner. So there's less and less risk of a lost crop in South America at this point.
Yeah, and I'm very appreciative that you brought up South America, because that's the other big element of the report. We were all honed in on what the yield numbers were going to be, what ending stocks numbers were going to be here in the US, and we keep talking about the difference between two markets, right? Corn market, keep that separate from the soy complex, because yes, we did raise bean yields and a bit higher, I think, than we were all expecting as well. I mean, also slightly above, I think, what any market analyst out there was projecting with that 50.6 number. But overall, things are still just a little bit tighter on beans. I'd say a lot tighter, actually, in terms of the overall balance sheet in the US. But you go back to the global picture, we didn't really take that much production off of the projections for Brazil. I think we gave the Argentines actually a little bit of a bump when it came to production figures. So with that weather stabilizing in Brazil for the time being, and it has been somewhat stabilized over the last 4 to 6 weeks, which is why we've seen beans and protein come off of their highs into the levels where we are. I think that's crucial for the market. Continue to watch now, what is Brazilian development weather going to be as we push forward? Because I think one of the more bearish elements of that report Friday was also just the global corn ending stocks number, which jumped, 10 million tons. So we've got a big crop here in the US. You've got big crops in South America. You've got the Chinese producing a massive crop in terms of year-on-year increases for those guys this year. So yeah, the tale of two markets, corn just feeling super bearish, beans and meal, maybe it gave us a buffer Friday. That feels nice, but overall, things are still tighter at home, and we'll see if these South Americans give us a bump. Keeping our grain buying hat on, Jenny, if you would just give us a little bit of what's been happening in the milk and dairy markets lately.
So as we turned the calendar through December and into January, it's our normal lackluster part of the year, we'll call it, in the milk markets. Anyone who's milked cows for a while knows that January and February tends to be the low in our markets. We're playing out that way. It does feel like within the cheese trade, we are finding a bit of a bottom down here in the $1.40 to $1.50 range for spot cheese, which is good. We had a global dairy trade this morning that was higher on cheddar and mozzarella. Cheddar price came in at $1.91 for our friends in Oceania, and mozz came in at $1.74. So compared to U.S. Black and Barrel at $1.44 and $1.56 this morning, we are again the low price leader, we'll call it, in the export markets, but we're not seeing a ton of interest come in. So it's still a demand problem versus an oversupply. So we're going to have to work through our extra cheese, get through that. Butter seems to find some support here at $2.50. We've had very few spot trades sub $2.50. So we seem to be, again, finding a little support. So if any good news in the dairy markets, when you're at $15 milk with $18 cost of production, the maybe good part is we're finding a little bit of support in these markets of late. It's just hard right now to make a demand story that probably justifies us quickly rebounding back up to that $20 class 3 milk kind of territory and $2 cheese. So probably going to slug through this for a while and kind of see when we can clean up some of the extra cheese on the market.
Okay, understood. Thank you very much, Jenny. And thank you for wearing those multiple hats that you wear here at Everag, covering all sides of the industry. Very cool stuff. Guys, before we let you go, we might as well just do a couple bold predictions while we have you on the show, right? So let's do a bold prediction. Okay, we're going to borrow from Phil and Kathleen on the Dairy Download in their bold predictions. So we're going to start on the corn side of things, and this is just a yes or no bold prediction, Verl. Are March corn futures going to trade $4? March corn futures, are they going to trade $4, Verl?
$4 even. No.
Beautiful. Jenny?
I'm with Verl. You always need to agree with Verl. That's rule number one around here. Just agree with Verl.
That is a solid life lesson to live by, is just to kind of go with Verl, right? He's
Unless we're talking about soybeans.
He's no doubt Prather for a reason, right? We can't doubt, no doubt Prather. I'm going to side with you guys. And again, we're talking about the March contract. I also don't think we will trade $4 even. Now, I think if we get through the South American development, if we get into maybe some, large planting numbers again, and the U.S. corn grower feels incentivized once again to throw out a giant corn crop despite what pricing looks like, then I think maybe you start to take some of the later delivery periods down. But I know a lot of folks have been asking, are we going to trade this nearby contract? So I think the three of us are in agreement that March futures will not trade $4. How about March beans? We're stuck right in the middle here at like $12.25, just to round things out. A little bit different of a question. Verl, what will this market trade first? $12.50 or $12 even on March bean futures?
I'm going with $12.50, Jim, on March beans. I think we found some solid support on Friday.
And we got awfully stinking close to $12. Awfully stinking close. Jenny, March bean futures. Again, this is the March contract. What do we trade first? $12.50 or $12?
I'm also siding at $12.50, but I feel like I should take $12 just so we have an actual bet going on and we have something varying.
I appreciate that, because it's tempting just to side with Verl on everything he says. It's tempting. So to keep things interesting, someone has to say $12.
So for the sake of being the other side of the bet, I'll take the under. I'll take the $12.
Oh, it's a dicey bet. We're right in the middle. It's 25 cents either way. We made a run up towards $12.40 this morning on Tuesday morning, but we also made a run towards $12 on Friday afternoon. So we're right in the middle. It's going to be interesting because, like we said, things are a bit tighter here at home, but maybe the South Americans can give us that big buffer. At least they're projected to give us at this stage. So very interesting stuff. It'll be an interesting little January, February. And then, of course, we'll be talking about planning projections before we know it, you guys. It's right around the stinking corner. So can't wait for that. But in the meantime, thank you both for joining us today. It's super awesome to have both of you here. Great to have your insights as always. We'd also like to thank the Everag Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.